Good morning, traders. Welcome to the TMT Daily Strategy video for Tuesday, February 13th. All right, so we did get a continued follow-through rally from Friday's hammer, okay, which we discussed in yesterday's research video. Where do we go from here? Well, we've retraced right now about 50% on all of the 5 indices that we follow. I have some indicators based on my trading model that we've developed years and years ago. I'm going to share with you to see where possibly can this retracement or corrective rally, right now that's what we're calling it, a tradable rally, corrective rally off the lows, but we do see lower prices to come. Now, obviously technical analysis changes on a daily basis, if not hourly basis sometimes when markets are really moving fast. But at this moment, I'm really comfortable saying that this retracement rally has a little bit more to go, and we're looking for right around that 61.8% retracement, and we kind of sort of put a scenario map, if you will, of where we possibly think the market go based on our sentiment and of course based on what price is doing at the moment. So let's get right into it. We have the bullish percent SPX, as you know, for those of you who have been following me in this research videos for quite some time. It's a very reliable indicator. It is measuring right now at well, it's up $1 today, but we had a low of 40.40. So 40% of the S&P is bullish, okay, where the balance is not. Now, this is not, to me, a full-blown washout, as you can see here that we had. And I may add that history does repeat itself in the stock market. At least we're talking about the stock market. So don't get fooled by all the pundits out there. History does repeat itself. At one point in time, history does repeat. And you can see here what happened in late 2015 in September. We had a washout all the way down to, I think we were at 6%. And then back again in, I think it was January of 2000. Actually, it was January, the first, right out of the gate, the first day, we sold off like another 10 or 12%. Very similar to the trade that happened here in February. Okay, so we had a double bottom, and this was a deeper low than this previous low, and then we started our ascent back in all of 2016 and all of 2017. So to me, I do think that this has more to go. That's another reason why I'm thinking that the selling is not complete. That's just one based on our trading model. Okay. Next is going to be very reliable indicator, the New York Stock Exchange advanced decliners with volume. Same thing happened here. As you can see, we pointed out late 2015, again 2016, the deeper low from the previous low, and then again we're down here at negative 300. Still not quite a washout. So I do think that we're going to get our washout. When could that be? No one really knows. Again, let me get to the S&P and I'll show you what we're probably looking at for a scenario. Here is basically our culprit, okay, is the 10-year. Rates are rising. We talked about this. Called the low, a generational low in rates, the 10-year back in August of 2016, the summer. I also said that bonds have made a top and ended its bull market run for the last 30 years, and it looks like that's pretty much the way it's going right now. This is an overlay of the S&P cash, and you can see when rates are low, the rates will follow what the S&P is doing. But at one point in time, when rates just can't not hold a certain area, meaning that they'd be capped somewhere around 2%, and just kind of stays around there while rates are just kind of humming along, and we get the markets to go higher. But when you have rates start to rise, and I'm going to say I think it's doing a lot of hurting at above 270, okay, 2.70. If we break above 3. Guys, I think the markets are going to be in big trouble, and I think that the markets are just not going to digest that 3%. And the way this is going, honestly, I think we break 3 sometime in the next couple of months, if not sooner. And that's going to really hurt the market. So given the fact of what I've shown you of all the indicators, that there's still some room for some washout levels. Now again, talking about a tradable bounce is one thing, and then we talked about the McClellan oscillator down at washout levels. Yes, that was at washout levels. The stock's above the 50-day moving average. Yes, that was also at washout levels. But and that's just a short-term blip. So we were looking for that bounce Thursday, and we got it on Friday, and we had it on Monday. And many of you did very, very well looking for that long. As a matter of fact, we did get the gift of the pullback where the S&P went from a 27 handle up 27 handles to up only $1.50, and then started to it's ascent higher yet again. So that was a gift that many of you got and caught off of the trading videos and off of the Pro Trader Premier video. So hats off to you guys. That was great. But again, this at one point will continue to hurt equities in a big, big way. So pay attention to the 10-year. If you don't have the feed, look at the TNX, Tom Nancy X-ray, and you could, based on that 10-year rise or obviously decline, off of the TNX. Okay? Now let's get right into the VXX. Now we talked about VXX where we had an outside close, we closed in, and today we took out the low. This is absolutely a buy signal for equities and a sell signal for the VXX. Now, I'm going to put a however in there. When we have extreme fear, the VXX, now if you recall, we were down, $1, maybe $1. I think we were down almost $2 at one point in VXX. If this was a normal occurrence, the VIX should have been down $5 by being up 500 Dow points, and we had a 20-something point move in the ES, but it did not happen. So that's a little clue to say, hey, maybe I shouldn't be shorting volatility. I mean, that's a hard $2 based on what the markets did today. So to me, I need to see at least a little bit of fear that's being released out of the market, where we can say, okay, there's not that much fear right now. Now on the next bounce we can short it. So I would kind of still stay away from it. It doesn't mean that you can't trade it short. It's just that the high probability trade that we like to teach and trade is not there at the moment in VXX. There's going to create a ton of opportunity in the coming weeks, months, and the rest of this year. It's just not. I don't think that's going to happen at this moment. And this is why I look at when we get bases like this. When you see these bases, this is just setting up for an explosive move. Look at what happened here. Now we're basing midpoint, okay? And let's just do this here. Let's just grab a Fibonacci retracement. Let's grab that. Okay, there we go. So we grab it from high to low, from low to high, excuse me. And now where are we? So we pull back down to the 61.8% retracement, right, which is our golden ratio, which is perfect. That it held, and this is a big supply area and demand area where traders reacted to the VXX. That's going to be a big support area here, and that's what I want you guys to pay attention to for those of you who are trading in intraday. But at 61.8% retracement, if the market was so weak enough, or the VIX in that matter, should have retraced pretty much the whole move back. It did not. That to me tells me that there's ample buyers in these areas here. So unless we get a crazy move to the upside where everything is back to normal, and I may add, and I forgot to tell you this in the beginning, we had some notes and some research that came in that E-Trade opened up 37,000 retail accounts last week. 37,000 retail. That means that the retail is back in it and they're going for broke. Okay, and that's what I mean, going for broke. So we have high retail interest still at these highs. Okay, we have the pundits continue to talk about buy the dip. That means this was just because it was only because of the short volatility products. That's not true. Not true at all. Okay, but obviously they don't want to say that, hey, the 10-year is rising and we're having some problems. And also the Trump administration. I can go on and on. The bottom line is that there's nothing great out there. I don't think earnings is that great. They might say it is. I don't believe so. Analysts have been cutting estimates to make sure that they beat. I mean, it's just, it's not what it should be, is basically what I'm saying. And I think the big money's starting to read into that. That's why the VIX is still elevated at $47, where only just a couple of weeks ago it was at $28, okay? And even less than that. So that tells me that there is still fear, and I'm not looking to short the VXX at this time. But again, they go based off of your trading plan, all right? And so let's take a look at the ES, and I put the retracements out there, and you can see ES was the weakest of the bunch, although it was up big, but we didn't even get to the 50% retracement. We did tag the 38. We actually closed just right at the 38% retracement. So a lot of work to do. And again, guys, I'm going to give you that little scenario. Again, it doesn't mean that it has to happen. Here's the 2 days, right? We come up. We tag the 61.8% retracement, or probably even less than that. We come back down to test the lows, okay? Then we roll back up to the 61.8% or even higher to try to challenge the highs. And then from there, we fail, and then we are now getting sell signals across the board. So that's what I'm looking for. Doesn't have to happen. Does not have to stop at the 76% retracement or the 68 for that matter. But it looks, wherever this current rally is, we need to mark this, and of course I'll mark it for you as this local swing high, and that's where that rally, that next footing, will need to take that out to get everybody long. Shorts will have the stops right above this new swing high when that does happen. Okay, that'll add more fuel to the fire, push this market, extend this market from this low here, and everybody will say we're taking out the highs, and that's when the smart money comes in and really bangs the market lower. And I think that's how that scenario is going to play out. All right, hasn't played out yet, but we'll map it accordingly. All right, and this is what we're going to be doing here, so we can get out some good trades. Nasdaq. 38% retracement, actually tagged at 50% before pulling back, so it did have a little bit more strength. I am looking for anywhere from the 50 to 61.8% retracement, and I'm looking for a sell signal, okay? Just because price gets up there, it doesn't mean it's going to happen. We need our sell signal and the trigger to sell, okay? And it's, again, based on your model as well. Here's gold. Now, gold beautifully tested this, my lower trend line of the symmetrical triangle, which is it's kind of even long in the tooth. You might want to even call this as more of a horizontal triangle, pretty much. But tested it 1, 2, 3, 4, 5 times. Remember, every time if you keep touching that and keep kicking at that hinge of that door, at one point it's going to fail. And I think that's going to happen on the next retracement rally, fail into the TMT, proprietary price channels, and tag this 19 area. And that's when I'm going to be interested in start looking at GDX and, of course, gold. I like gold. We're going to do a dollar cost average trade like we did the last time, which we were very successful in. And I'm looking for the gold to break down. Now, remember, gold is a safe haven play as well as bonds. So maybe we get a pause on the downtrend and bonds and gold start to move higher. That's possible. That's why I'm not looking to short gold. I'd rather be a better buyer at the 1249.50 to the 1270. Start dollar cost averaging the trade. And I'm patient. I'll wait as long as I have to. I'm not looking to buy up here at this moment. Not with GDX starting to break down. Crude oil. Again, it looks like we are going to be tagging this 55.30, 56.58. I like to see this bounce retrace back into the TMT proprietary price channels, and let's see if we can get a short trade off and hold here. You can see that the 21 EMA is now rolling over, telling us price and momentum is starting to roll to the downside. So that to me takes all of my bets off of the long trade. We did break the TMT proprietary price channel. So if anything, I'm looking to be a better short player than a long player in this thing. Unless we get a real big washout down into this area here and we go sideways for a good week, then it's possible that I would be looking for a long play. Of course, I'll bring that to you as it develops. TLT. Pretty much going to be tagging this 116.83. Again, I'm looking for a short up into the 123 to 125 area. Until then, I'm not going to touch it to the long side. ZB, pretty much the same. I'm looking for a 38 or a 50%, even a 61.8% retracement. These are your areas that I'm looking for off the daily chart. Mark them down in your charts and your trading charts and be ready, because it will happen at one point. We get this retracement rally and we look for some sort of failure for lower prices, because bonds are headed lower. Again, they are going to pause. Nothing just goes straight down and or straight up. They are going to pause. All right, let's take a look at the ETFs, the daily, and you can see here we hit the 38% retracement on the spiders. Okay, we're looking for a 50 or 61.8% tag and then fail. All right, volume is very light today, so this is a good part of telling us that we are in a retracement rally, a corrective rally. This isn't just real buying, it's short covering. Of course, somebody nibbling, trying to pick bottoms as well, but this volume did not tell me anything that I wanted to see if I was a bull. Okay, and again, we're at washout levels in RSI and MACD, so logical to get a corrective bounce, absolutely. But I think that bounce is going to create an awesome shorting opportunity, unless it changes. Same thing here with the the diamonds, the Dow Jones ETF, 38% retracement. We're looking for the 50 or the 61.8% retracement here. You can pause the video and just mark these down on your charts. These are going to be valid for days to come. Okay, IWM. IWM did give us a pretty big fake out, as well as the market itself. Almost tagged the 38% retracement. Again, looking for that 50% of 151.48 and the 61.8 of 153.62. You can see that again, MACD RSI, we're at our washout levels here. Okay, and that's the IWM daily. Okay, Qs. we're going to take that, here we go, excuse me. We're going to take the next step. We're just underneath the TMT proprietary price channel. We did take the 38%, now headed to the 50. So this is the strongest. But again, look at the volume. Volume is not really confirming what price is doing. Price is ultimately what pays us as traders, but it is something that we need to keep an eye on here, okay? So 50, 61.8% retracement, that's what I'll be looking for. Okay? And last off the daily chart is going to be the IYT, which is the transportation ETF. Nice hammer. Follow through, took out the Friday's high. Again, I'm looking for somewhere here to fail back into the 50 and the 20-day moving average, so somewhere around the 150 to the 151 area. Let's see where it goes, and if that fails and we start to head lower, this is our leader, and if we could see the Russell and the NASDAQ follow suit, then I think we have full-blown correction on the way. Although we are in correction territory, and I definitely am saying that, I don't want to just call a top. I need to see what the next rally is, this current rally is shaping up to be. If it is corrective like I think it is, and we fail, and we don't even get close to the highs, then I'm going to call a market top. Alright, so let's take a look at the intraday charts now. We'll go through these. We had our downtrend lines on all of the intraday charts, and they did break above it, so that is a bullish bias to the upside. 26.29 and a quarter is going to be your area of support. Keep that in mind. We do have areas of resistance here to trade off of and or to take profits in, okay? And this is a bigger area here, 25.85, if we do decide to roll back down here. But these are your areas of resistance and support off the ES. Okay? Same thing like the NASDAQ. We did break above our downtrend, alleviating, bearish symmetry of lower lows and lower highs. Again, now we're up and we're making higher highs and higher lows. That's creating bullish symmetry now, and this is what we're looking for. Again, here are your areas of resistance for today's trade, and these are your deeper pullbacks if you want to take a buy to dip type mentality for today. Here are your 64.51, 65.04, 75. Gold, as you can see, did not break above, so it is clearly in a downtrend, and that's why I am not trading it long, but I am not also trading it short because I am a better buyer. You can see that here. Lower high from the previous high, lower high from this previous high, and again, lower high from this previous high. So this is all lower highs, lower lows, and lower highs, creating that bearish symmetry. So I am staying away from that. I'm going to be a better buyer at the 1250 to 1270 area, dollar cost averaging. But if you are trading an intraday, big cluster here at 1293 to 1305, and then again 1310 small, 13, 14, 15 here. I wouldn't trade off of this low, but somewhere around here, the 1302, 1300 area, that would be an ideal situation for a quick buy and, of course, a quick day trade. Crude oil, pretty much the same as gold, did not take out the downtrend line. You can see that here. I'll just extend this a little further. All right, so 60.60 will have to come into play. That's going to have to be taken out on a closing basis. A couple areas of support, a couple areas of resistance here for you to trade for today. 10-minute spiders, as well as the other ETFs, it did take its downtrend. So now we have bullish symmetry. Keep an eye on 262.80, 258.45, and again 270.26 for resistance to 271.38, and then 273 all the way up to 276.44. That's your 10-minute spiders. IWM did the same, but we have a heavier cluster of resistance here at 151.79 all the way to 155.22. Remember, pause the chart, pause the video, and just write these down in your trading charts. 145.69, not too crazy about this. That's why it's in light green. I'm a bigger buyer here at the 143.12, way down below, and that's going to be the IWM. And last is going to be your Qs. You can see here, Qs did the same thing, took out the two downtrend lines, and now we're hovering the TMT proprietary price channel. Your bigger area is 155.75 here, guys, as support, okay? And then the 159, so you still got about $5 down below. And then again, resistance is sporadic as well. So this might be a tough one to trade if you want to manage your trade as far as your stop loss is concerned. Maybe I would do is I step aside until we get a little bit more consolidation here in the Qs. Otherwise, you're going to have wide stops to the buy side and to the sell side. So just keep that in mind. Be careful out there. Volatility is here to stay, and we are moving rather quickly. And we're really moving quickly from just as yesterday's video. We had market rallied and the pre-market sold off all the way down to almost unchanged to rally all the way back up and made new intraday highs. So be careful out there. Use your stops. Be very selective in your stock picks, but it looks like that we are really going to be having a great 2018. Have a great day, everybody. We'll see you tomorrow.